Hi, guys. A very good morning to all our viewers on Money Control. Thank you so much for tuning in early in the morning. And as promised, we are here to discuss Meta's historic plunge. Meta, of course, as we all know it, is the new name of Facebook, the holding company which owns WhatsApp, Instagram, Facebook, and the likes. Just to put things in context, we all know the stock nosedived yesterday, 26% lower is where it shut shop. And to put that in context, $232 billion worth of value eroded in a single day. It's more than the value of companies like McDonald's, Netflix, Morgan Stanley, and AT&T itself. So you can guess or you can imagine the kind of magnitude that we're talking about here. And to discuss what caused the Meta reverse or the plunge in the stock of Meta, we have with us Dr. Vikas Gupta and Madhu Chandade. Thank you so much, guys, for joining in. Madhu, I'll come to you first. Can you put things in perspective? I mean, what exactly happened? Why has the stock tanked so much?
Yeah, so there were multiple reasons. The first being, the revenue guidance, which was 3 to 11%, was much lower than what the street was going with. Uh, the second important thing, which is something worth exploring, is the feud between Apple and Meta, so to speak of. And they alluded to the new privacy setting of iOS, which prevented a lot of targeted ads. And that led to a revenue disappointment. And they're talking about a revenue miss of something of the order of $10 billion because of this. They also alluded to competition from TikTok and slightly disappointing active users numbers. So it was a combination of all these factors which led to the disappointment, and the stock is back to the level where it was in the summer of 2020.
Wow, that's quite a reversal we've seen on the counter. Dr. Gupta, if you would like to also pitch in to the conversation, you track several, big global stocks as well. So, what is your reading in terms of the sentiment, the fundamentals, and the other triggers that cause this, nosedive?
Yeah. So, see, first thing, even before we discuss the drop, keep in mind that Facebook is likely to be one of the major, it is already, and the future where technology is going to be the centerpiece of everything we do. Uh, Facebook is likely to be, or Meta platforms is likely to be one of the key stone species, as you call it, in the ecosystem. Okay. Even before the metaverse concept comes in. So it's a very, very important company, not only today, even from a 20-year perspective or a 10 plus year perspective. Okay, so that is something we need to keep in mind. Now, Facebook has continuously been struggling for last 3 4 years on various fronts. So there is market sentiment which keeps going against it. Uh, so every time regulators want to do something, and since they deal with consumers, customers, right? So the privacy concerns, so European regulators or American regulators, etc., that has always been there. And once in a while, it becomes takes a peak, and then the stock plunges. The stock is down now, but it has been down for several months on the back of regulatory
Hmm.
action also being taken in the US parliament. Okay, so on Capitol Hill, there is various things going on to break it up into various pieces, etc. Okay, because it's too strong, too monopolistic, etc. It won't succeed most likely, but that's the kind of headwinds it has been facing. And then this near-term headwind, which is the iOS update. Okay, so there are a number of things. See, TikTok, they mentioned, but TikTok, just keep in mind that they are 5 billion revenue. Facebook is 130 billion revenue, right? So that's the kind of difference in the companies. They have a billion users worldwide, and Facebook has something, the monthly active users, etc. Facebook has something like 3 billion. So there are total 4 billion internet users worldwide, out of which 3 billion are already with Facebook. So
Sorry.
naturally
Yeah.
people know that the growth headwinds are going to be there. Still, Mr. Market being Mr. Market, I'm not saying Miss Market, but Mr. Market being Mr. Market, will react to very, very near term things. So,
Right.
yeah.
But if we look at the commentary, Zuckerberg did talk about competition, people, turning to several other social media apps like TikTok. He also spoke about headwinds emerging from Asia Pacific region. Could there be more pain going forward for Meta?
Absolutely. I mean, see, once the price goes down, everyone else follows. The analysts follow with even lower price targets, right? And then, so even though it shouldn't, fundamentals should drive the price action, but price action starts driving the narrative. Okay. Uh, so just to put in perspective, we are getting today about $57 billion of cash flow, okay, from this, and it's valued at something like 900 billion after the fall, right? So you're getting more than a 4% yield. Now, yes, in the near term it could fall further, okay, nobody can deny that, but from a longer term perspective, I think it's an amazing opportunity for people who want to bet on the disruptive transformations which are happening, and Facebook is one of the keystone species on that.
So, given the kind of correction the stock has seen, it's a good time. Are you advising your clients to look at investing in Meta?
So yes, so we were already invested, our clients were already invested in Meta, uh, uh, but yes, this gives an additional opportunity to add more to it. uh, of course, I cannot make a general recommendation to other people, but to our clients, definitely that's the a very, very clear cut. I mean, you compare it with the other big tech, I mean, this is in such a sweet spot that not only do you get a fine, I mean, growth rate is impacted, no questions about it. So the growth rate is likely to remain slow for the whole year, probably one more year. You know, it's not that there
Hmm.
will be a sudden uptick, because they have to solve the issue of how to monetize reels. Okay, and see, the focus why they're changing, if you remember, it's not some surprise to the Facebook team, right? So they introduced the metaverse concept because they know that this growth trajectory is slowing down, right? There's always a S-shaped curve, and you are at the
Yeah.
nearly at the top end. So they know that about a year or two back. So it's slowing down, and so you have to switch to a new product. Okay, so that new product is metaverse, right? That's what they have thought of, which will last them for 20 years or more. uh, so that's just at the beginning. So at those change points, inflection points, naturally there is little bit of struggle when you move from this kind of a trajectory to so the this is slowing down, the other one is yet to pick up, and you see a year or so or two of slow pace. The reels
Right.
thing is very important. Yeah, sorry, let me just complete one part.
Yeah.
I wanted to highlight is the young crowd. The young people is where they are focusing and adding reels. Okay, so they have always been focused on taking the people young, and the young people are completely focused on a short video format, which is not monetizing right now, but that's the format you want to capture so that the future daily active or monthly active users are already captured by you rather than them migrating to something else.
Right. Madhu, I'd like to come to you as well. Can you put things, together and tell us how are other IT stocks, whether it's back in the States or back home, could be affected by this? We already saw some kind of rub off yesterday, but is it likely to reverse now that Snap has also declared a good set of numbers?
No, I think let us not put everyone in the same brush, because it all depends on the merit of the individual companies. Like for instance, if you look at Alphabet, Google came out with their numbers. Their revenue guidance is way higher. The stock had reacted positively. They are not impacted by that iOS privacy setting so much. Yesterday, Snap also came out with their numbers. The stock was up some 2%. So, yeah, one has to see every stock in its own merit. But having said that, there is an overriding theme, which is, beyond the particular bottoms up stock analysis, which is the macro and the markets, and that beacons attention. Because as we all know that, the US Fed is all set to start monetary tightening from the month of March. It could be aggressive depending on the inflation situation. US economy is red hot. And because of all this, we could see some kind of a risk of trade. And whenever that sets in, anything to do with, a slightly expensive valuation, basically, growth takes a backseat. Investors, there's a rotation in favor of value. That also
Hmm.
kind of plays out, and that plays out globally, whether it's in the US markets or whether it's in the Indian markets. That is
Hmm.
something that we need to keep in mind as investors.
Madhu, a question that a lot of our viewers want to know is whether Indian IT stocks, stand to get impacted in any way with what's going on back in the States.
See, it's about liquidity rather than a stock in particular. When there is a gush of liquidity, that tide lifts all boat, and that is what we have seen since the onset of the pandemic. From say the lows of March in 2020, all indices have jumped up significantly. Indian broad indices, IT index, IT stocks. Of course, there is a fundamental change in the outlook of technology stocks post the pandemic. So, yeah,
Hmm.
that positive rub off is there. But yes, valuations have re-rated. And many of the stocks, especially in India, the mid caps that have shown much stronger growth because of their base, because of their agility, nimbleness,
Hmm.
etc. They are priced at a valuation which was not seen in earlier cycles. And hence, if there is
Yeah.
any disappointment with earnings, you will see that kind of, I'm not meta kind of selling, but you will see some kind of a profit taking. And you have seen in the last fortnight or so, anything wherever there is a bit of an earnings disappointment, or the earning excitement has not been of that order, there has been profit taking. So I would say that
Yeah.
it's a part of.
All right. But at least for this quarter, most of them have already declared their earnings. So you don't see any significant rub off coming on IT stocks, right?
No, see, so this is a social media platform. The revenue sources are very different. And here we are talking about mostly IT service company, which are taking part in digital
Services.
transformation of
Yeah.
enterprises. And this demand is unprecedented and something that these companies have never seen. The only issue which is plaguing them is, the resource crunch, which they're addressing. Most of the companies are addressing head on.
All right, makes sense. What about today's trade when it comes to the US Open? Because I like to rope you into this chat. How do you see the markets reacting? Because because US, if you look at it, Wall Street futures are looking good. Amazon, Snapchat numbers have been delivered, so there has been a bit of a breather or a reversal to some extent already that we're witnessing. So could it be a different day for markets back on Wall Street?
No, absolutely. When one side takes a very strong action or overreaction, then naturally the other people who see value in those things find an opportunity, and that's why you see these kind of bounce backs. Okay, so the chances are high, but we are not experts at predicting daily bounce backs. Okay, our outlook is more long term. So if yes, but most likely it's
Hmm.
going to be positive. It looks like. But if it is, it's not going to be suddenly that the Facebook Meta is going to go up significantly, right?
Yeah. But overall, what about the fundamentals for American IT stocks, IT giants, the FANG stocks as we call them?
Yeah, so see, from year to date, it's about 10% loss for the big IT stocks, right? Nasdaq 100, etc., is about 10% down, and the small cap IT, S&P IT technology, that is down further a little bit. Okay, so the small caps have been hit more. If you take at the just below Nasdaq, the very popular companies, many of them are have plunged over last couple of months by more than 50%, right? So we need to keep in mind Nasdaq is hiding all of that. So when we say tech, we don't know what is going on inside. So there is two different kind of companies in the US tech. There are companies which are making huge profits and cash flows. Okay, so they're not like your traditional .com of the 1999 and etc. These companies, and Facebook is one of
Mm.
them, Google is another, all of these guys, Apple, etc., right, Microsoft, all of them are making huge fat cash flows of 50, 70, 80 billion dollars. So that's just the free cash flow. Okay, I mean, it's larger than the market cap of most companies. They make it annually. Okay, so you take those companies on a different area, and there are these other, earlier unicorns now, which are multi-billion-dollar companies after getting listed, and which were growing very, very fast, but on the back of zero profit, huge losses, right? But their growth
Mm.
is very fast. So the whole model is on cash flows somewhere 15 years down the line or 20 years down the line. Now, when you think about those companies with huge liquidity sloshing around, people were willing to bet on them like a venture capitalist, right? And when you do the model, the duration, if you take the equivalent of a bond, the duration of these companies is something like 20 years. Okay. Now,
Mm.
duration, as we know in bonds, the longer the duration, more sensitive it is to interest rate increases, right? Or changes. So when Fed started indicating that it's going to happen in next few months, the change in the discount rate, that itself changes the valuation of these companies significantly, because you can call them long duration equities, as opposed to companies which are already
Mm.
making billions, hundreds of billions or tens of billions of cash flows annually. So those companies, all of them fell in sympathy, but there is nothing wrong with these cash flow positive companies, but there is a lot of things wrong on the valuation front with those cash flow negative companies. So we need to keep those two things in mind. Those companies will struggle a lot to come back, while the cash flow positive companies are going to be fairly priced very, very soon.
All right, guys. We'll wrap up this conversation on that note. Let's see how the market plays out on Wall Street, not only today, but in the months to come as well. And all eyes definitely will be on IT stocks as well. They have, witnessed a fair amount of, volatility in the recent past, keeping up with the market sentiment. So let's wait and see how it pans out. Madhu and Vikas, once again, thank you for joining in. And thanks to all our viewers for tuning in early in the morning. Have a great day.
Thank you. Thank you.